Welcome to the Thursday edition of Tech Stocks Daily, where we dive headfirst into the exhilarating world of tech market drama. We've got a session you won't want to miss today. Microsoft's caught in the geopolitical spotlight with an email debacle, sparking employee uproar and protesters shaking up conferences. Over at Apple, juicy competition heats up with Mark Zuckerberg's spicy accusations about AirPod exclusivity, while Apple contends with potential threats from OpenAI's new hardware moves. Plus, we're crushing the numbers with Autodesk's stunning earnings that have Wall Street buzzing and stock prices soaring. So grab your earbuds and hold tight. Today's podcast is packed with insights that'll have you hooked from start to finish. Microsoft, a tech giant forever at the center of the digital universe. But today, it's not just about software updates or cloud computing triumphs. Nope, today, the spotlight shines on employee uproar. So what's cooking in Microsoft's inbox? Let's spill the beans. Microsoft has found itself amid controversy and employee unrest over alleged email censorship. Yep, I kid you not. Microsoft employees have raised alarms over what they describe as selective blocking of Outlook emails containing words like Palestine, Gaza, genocide, apartheid, and phrases like IOF off Azure. Multiple reports emerged suggesting that emails containing these contentious words were mysteriously failing to send. Employees did some sleuthing, and by sleuthing I mean sending test emails with and without these words. Guess what? The ones without such spicy terms zipped right through, leaving the suspicious terms sequestered somewhere in email limbo. Naturally, as these things tend to do, whispers turned into a roar, making their way onto internal Microsoft message boards. Employees clamored for answers, especially with cheeky speculation on why emails with Israel slickly passed through the virtual mailroom, while Palestine was being treated like a hot potato. Some creative folks even tried bypassing this filter by using alternative spellings like P4Lestine, which, surprise, made it through. It's like a CAPTCHA test for geopolitics. Frank Shaw, Microsoft's chief communications officer, played the classic card of clarifying. No, Microsoft wasn't blocking or censoring anything, he says. Except, when those emails were being sent to vast numbers of distribution lists. Apparently, mass emails are frowned upon unless you've RSVP'd to the political hot takes opt-in club. Adding even more dimension to this suspense thriller, at Microsoft's Build Developer Conference in Seattle, protesters cropped up, calling for Microsoft to cut ties with the Israeli military. Even keynote speeches weren't safe from interruptions. We had engineers and employees turning into full-fledged protesters right on stage. Talk about stealing the spotlight. One protester, Joe Lopez, frankly urged CEO Satya Nadella to reveal how Microsoft became tangled in such a political conundrum, boldly accusing them of being arms suppliers through technology. Spoiler alert, Lopez didn't keep his job much longer. Firing employees for such public acts seems to be part of Microsoft's playbook lately, bolstering an array of similar tales where outspoken employees found themselves saying, well, that escalated quickly. So there you have it. Beyond pixels and processors, Microsoft's embroiled in quite the narrative of free speech versus policy that demands more than just a simple software patch. Let's see if navigating this employee discontent calls for some AI-powered conflict resolution, or maybe just a reminder that some block can't simply be Control-Alt-Deleted. Classic Microsoft drama, isn't it? Stay tuned, because tech's never boring, at least not when it's embroiled in geopolitical debates. Oh boy, Apple has found itself in the hot seat today, and let me tell you, it's quite the saga filled with twists, turns, and a dash of spicy competition. Firstly, let's dive into the performance metrics of Apple in the bustling technology hardware, storage, and peripherals industry. They're like the cool kid in class picking up accolades but facing a bit of existential crisis. Here's the rundown. Apple's price-to-earnings ratio is lower compared to the industry average, which might excite some bargain hunters. However, before you start dreaming of snagging an undervalued gem, you should know that its price-to-book and price-to-sales ratios are significantly above the industry average, like double the vanity kind of high, which suggests Apple is walking the fine line between rockstar status and overvaluation. Meanwhile, Apple is flexing its return on equity muscles at a whopper 37.11%, slamming the industry average. However, not everything's sparkling in paradise. Apple's revenue growth is trudging behind peers, which could make some investors start sweating. Slide over to the spicy gossip. Hold on to your AirPods, because the Meta platform CEO Mark Zuckerberg just vented over at the Joe Rogan School of Podcasting about Apple playing a little too clingy with its AirPod connectivity protocols. While Zuckerberg was on the mic, he accused Apple of making things exclusive. Because, brace yourselves, they didn't encrypt the protocols. His beef? Make it more like an open tapas bar of audio connectivity. This comes as both Meta and Apple cozy up to strategic launches in smart glasses, steadily eyeing each other's moves like aggressive chess grandmasters. And speaking of checkmates, Apple faces a check in its sandbox from AI glitterati OpenAI, which just snagged Jony Ive's hardware startup for a mere $6.5 billion. According to industry expert Gene Munster, this bold move could be Apple's first real threat in eons within its cozy hardware kingdom. It's like an epic fantasy saga sequel titled The Return of the Innovative Hardware Wars. Although our friend Mr. Munster soothed the looming discrepancies by touting Apple's robust ecosystem with its ironclad loyal user base, he threw a bone and suggested that Google might be more vulnerable. given its less fortified integration than Apple's superglue-like hardware-software symbiosis. Overall, hope some Apple folks are redefining what it means to boost sales amidst prolific competition and late-night podcast rants that splash their conduct issues across the industry. Whether it's unparalleled innovation or corporate squabbles, Apple's got techies and investors hooked like we are watching the latest techno thriller. Stay tuned, folks, it's only getting juicier from here. Today, Autodesk was in the tech spotlight thanks to their stellar fiscal first quarter results for 2026, announced after the market closed on Thursday. The company really knocked it out of the park, exceeding Wall Street's expectations and sending their stock price climbing faster than a teenager's heart rate at an AI dungeon drop. The key numbers? Earnings per share came in at 2.29 cents, leaving analysts projected $2.15 bite-sized in the dust. And when it comes to revenue, Autodesk raked in a sweet $1.63 billion, easily surpassing the anticipated $1.61 billion, and showing some strong growth from last year's $1.42 billion in the same period. Autodesk's CEO, Andrew Anagnost, added some poetic flair to the company's performance, despite the turbulent geopolitical, macroeconomic, and policy backdrop. Kind of like performing a concert during a hurricane while nailing every note. Anagnost pointed out that Autodesk remains focused on boosting long-term shareholder value by honing in on cloud services, platforms, AI, and innovative sales strategies to up those juicy margins. They're also giving their stock a little TLC with potentially more share repurchases thanks to an audience-grabbing free cash flow. In what could be considered a perfect encore for their first quarter performance, Autodesk raised their fiscal 2026 guidance. They anticipate second quarter adjusted earnings per share will range between $2.44 and $2.48, overshooting the analyst estimate of $2.34. Revenue projections are also trekking upwards to hover between $1.72 billion and $1.73 billion, beating the expected $1.7 billion. On the longer horizon of fiscal 2026, Autodesk tweaked expectations for their full-year adjusted EPS and revenue too, nudging these figures up to $959.73 and $6.92 to $7 billion, respectively. Talk about having the aspirations of a trapeze artist without a net. Their stock followed suit, sharing in the excitement with a pleasant 3.18% rise at 304.39 during after-hours trading on Thursday. Clearly, optimism for what's to come is not in short supply. But hey, don't just listen to my pixelated thoughts. I'm curious about your take. Do you think Autodesk is paving a golden path with their focus on AI and strategic market exploration? Or is this optimism a bit of virtual reality blended with some augmented enthusiasm? Jump into the comments section below, and let's hear your thoughts on whether Autodesk's successful playbook has you considering them a go-to tech star, or if their stock price gives you pause. Your insights are like 24-karat streams in the tech world's data lake, so keep them flowing. All right, tech aficionados, let's dive into the pulsating world of stocks. Out of today's lineup, Autodesk has caught my eye, and here's why I'm thinking of putting on my shiny analyst hat. Given the stellar earnings report Autodesk released, it was like watching an Oscar-winning performance breaking box office records. The company exceeded Wall Street's expectations across the board. Earnings per share went above what analysts predicted, and their revenue numbers sang a higher note compared to what was expected. Plus, their decision to raise the fiscal 2026 guidance could be like pulling a rabbit out of a hat on Wall Street. It's a magical move that keeps investor optimism flying high. The company seems strategically focused on innovative avenues such as cloud services and AI, cost efficiency, and keeping shareholders grinning ear to ear with potential stock buybacks spurred by robust free cash flow. Talk about painting a pretty picture, right? So what does this mean? I'm leaning towards A or even A, depending on how adventurous you're feeling. Autodesk's strong performance and promising future outlook can make it an attractive investment opportunity for those looking to ride that wave of innovation-driven growth and market success. Now, this is where I put on my wise vlogger cape and remind you to do your own research. Always take a deeper dive into financials, market dynamics, and personal financial circumstances before making any investment decisions. Because while tech is thrilling, it's not a one-size-fits-all game. Your due diligence is tantamount in navigating these bustling investment waters. Keep sleuthing like tech-savvy Sherlock Holmes, and you'll be popping with profit. Today was a splashy cocktail of earnings surprises and shareholder sagas. Microsoft is dancing on a geopolitical tightrope with email drama and protesters at the helm of unrest. Apple is navigating a tech rivalry jungle. Get out your popcorn between smart glasses duels and connectivity debates, while keeping investors' hearts pounding over financial metrics and high-stakes startup maneuvers. Autodesk served up a financial thriller worth $1 billion, inspiring confidence with its spectacular earnings and ambitious forward-looking guidance. If you found today's tech tidbits both exciting and enlightening, be sure to hit that like button, subscribe for more entertaining insights, and share this video with your fellow tech enthusiasts. Can't wait to see you back here tomorrow for more tech news that'll keep you on the edge of your digital seat.